At the end of the year, there's going to be a lot of changes. So the Australian Securities Exchange is making it a lot more difficult for early stage businesses to list. Why is that the case? On one hand, they are sick and tired of seeing very, very early stage businesses list on the ASX, and then shareholders, retail investors lose their money, right? An example is Refind. Refind RFN went from 20 cents all the way to $2, and now it's 7 cents. Now, Refind kept on touting that they've got a lot of enterprise software clients. They mentioned about Domain.com and McDonald's, etc. But the fact of the matter is, when the quarterly reports came out, as in every 3 months, as an ASX-listed company, you need to provide reports. There wasn't any revenues, or there wasn't much revenues, right? So the market obviously was seeing all these big names and thinking, hang on a second, these are paying clients. But at the end of the day, they only generate $50,000, $100,000, $150,000 for the month, right? Which is not a lot of revenues for a business that at $2 was valued at $200 million. So the ASX is making it a lot more harder, more difficult for early stage businesses to list. On one hand, that is a good thing. On the opposite side, it's not. So what they're looking for right now to list, there's the asset test and the profit test, and I won't go into that, right? But you do need a minimum of 20% free float. What free float means is that you need to sell a minimum 20% of your entity to list on the ASX. So you can keep 80%, but as long as there's minimum 20% free float, that's okay. You need to have at least 300 to 400 shareholders as spread. So what I mean by that is retail investors that have committed a minimum of $2,000. Now that $2,000 might actually go to $5,000 by the end of the year. So you as an investor, so the company needs, in order to meet some of the thresholds, need to have 400 shareholders at $5,000 a pop. It's probably going to likely to reduce from 400 to 300, but so you need audited accounts for the last 3 financial years. And if ASX doesn't like what you do, they do have the discretion to actually not list you. And that's what's happened. Has anyone heard what happened with Guvera, for example? Okay, Guvera was, has everyone heard of Spotify? Okay, Guvera did, or trying to do what Spotify does, or Pandora, but they were valued at $1 billion, losing $80 million a year. Would you invest in that business? No. Would we invest in that business? No. Would we put the Peak brand behind in that business? No. And the ASX said, guys, no chance we're listing this business, right? So that's an example of, call it, a business that the ASX took quite a bit of sanctions for.